Hey everyone, welcome back. I'm genuinely glad you're here because last week was one of those stretches where having a clear framework really mattered. The market was noisy, opinions were flying everywhere, and this is exactly where clarity separates reaction from execution. So I want to walk you through what we saw, how our pro members handled it, and how I'm personally thinking about the days ahead. First, a quick win worth acknowledging. While the broader market spent the week chopping itself up and second guessing every move, our pro members were already positioned. The top 5 plays tell the story. LNAI to the upside was about 39%, UVXY up 28, ASNS gaining 27, ONMD up 23, and even a bearish call on LUR that paid over 22%. That's not randomness. Out of 448 calls last week, accuracy came in north of 82%. Zoom out even further, and we're sitting just under 73% accuracy across more than 7,000 predictions. And maybe just as important, we saved you roughly 85 hours of research by processing hundreds of videos, nearly 1 million words, and tens of millions of subscriber perspectives, so you don't have to live glued to a screen all week. Now, quick pause before we go any further. Everything I'm sharing is for education and perspective. I'm not your financial advisor, markets involve real risk, and you should always make decisions that fit your situation or talk with a professional who knows it well. My job here is to give you structure and context so you're not flying blind. Alright, let's zoom out to the big picture. We're still in a corrective environment. Inflation pressure hasn't fully let up, yields remain elevated, and geopolitical tension continues to weigh on risk appetite. The S&P, the Nasdaq, the Dow, and even small caps through IWM are all leaning bearish. Volatility, measured by the VIX, is staying elevated, which tells me stress hasn't left the system yet. Energy remains the standout. Crude oil is holding firm, while gold is more neutral, just consolidating rather than breaking down. This is the kind of tape where patience and selectivity matter a lot more than aggression. Looking ahead to this week, there are a few catalysts worth having on your radar. Earnings are coming in from names like TD SYNNEX, AES, FactSet, Terns Pharma, Conagra, Lamb Weston, MSM, and Acuity. Industrials and electrical equipment could surprise on EPS, utilities and food names may act as stabilizers, and pharma remains very pipeline-driven. On the macro side, the Fed left rates unchanged in the 3.5 to 3.75 range, still clearly concerned about inflation tied to energy and global instability. No market holidays means full liquidity, so reactions could be sharp and unforgiving. Technically, the market still feels heavy. The SPX is carving out what looks like a bear flag, with support around 6350 and resistance near 6500. The Nasdaq is stuck in a descending channel, and market breadth remains narrow. Only a small percentage of stocks are actually doing the lifting. Megacap tech continues to show cracks, and institutional selling is still very much in control, especially across growth and high beta names. That sets us up nicely to talk about specific ideas, starting in the semiconductor space. Broadcom, ticker AVGO, is a short for me, as long as it stays below 314. What we're seeing here is a failed retest, buyers tried, couldn't reclaim it, and sellers stepped right back in. First downside target sits around 295, then 287 if selling accelerates. Stops belong above 314 and especially above 325. The conviction here is moderate, around 58%, mainly because the long-term AI story is still intact, but momentum right now is clearly not. Staying in chips, Nvidia, ticker NVDA, is another short-term short. The break below 170 really matters. Traders are treating that level as a line in the sand. There's a head and shoulder structure in play, with 164 as first support and 151 as the larger downside magnet. If price reclaims 170, the setup weakens, and above 179, it's basically invalidated. We're seeing a fairly strong conviction here, about 64%, but let's be honest, this is a tactical trade, not a bet against Nvidia's AI dominance. On the crypto side, Bitcoin, ticker BTC, is where things actually get interesting. Despite all the noise, Bitcoin continues to defend that 64 to 65,000 support zone. Institutional flows remain strong, and while pro traders are cautious, social sentiment has turned more optimistic. I'm leaning long here with pretty high conviction, around 85%. First target is 68,500, then 70,800. Stop sit below 64,800 and 63,200. As long as that flow holds, this looks more like consolidation before another push higher. Switching gears to defensive names, Costco, ticker COST, stands out on the long side. We're seeing rotation into consumer defensives, and Costco is holding support near the high 970s. That tells me buyers are comfortable stepping in there. I'm looking for a grind higher toward 1015 and possibly 1040. If we lose 960, the setup weakens. Confidence here is around 58%. Finally, JP Morgan Chase, ticker JPM, is holding key support around 280. As long as that level holds, a push toward 288 and 295 makes sense. Lose 280 and the bullish case weakens quickly. Conviction here sits around 58%. Stepping back to sectors, technology remains under pressure, financials are soft, consumer discretionary is mixed, and energy continues to lead. Defensive areas like healthcare and staples are attracting steady capital, which lines up with the broader risk-off tone. From a sentiment standpoint, institutions are leaning bearish, while retail optimism is still elevated. That kind of divergence usually means volatility sticks around. Options markets back this up. On SPY, put activity dominates, signaling downside hedging. On QQQ, there's a slight bullish skew, while IWM sentiment is clearly bearish. So, what's the game plan this week? Broadly, I'm staying short-term bearish on the indices, selectively shorting rallies in tech, and staying long energy, select defensives, and Bitcoin as long as its key support holds. This isn't a market to over-leverage or chase breakouts blindly. It's about disciplined entries, tight risk, and letting crowd wisdom guide you, not headlines. If you want to see how these setups are built, with precise entries, exits, and confidence levels updated in real time, that's what the Pro service is for. We do the heavy lifting, you get the clarity. If this helped you today, take a second to like, subscribe, and share it with someone who's tired of guessing the market. Join the crowd, and I'll see you in the next update.